yesterday's low of 24,204. Nikhil Rungta is with us. He's Co-Chief Investment Officer at LIC Mutual Fund. Nikhil, good to have you with us here. Thank you for your time. The big question is, as a money manager, Nikhil, what are your thoughts? Have they changed? Are you still very much earnings focused, or this Trump victory has added one more element in your decision making? If it has, in what way? Go on.
Yeah, hi. Thanks and good afternoon to you and your viewers. So, we'll continue to remain earning focused. What has changed for us is basically the focus now shifts from global to domestic. With this election outcome, what has happened is one of the events is behind us now. So let's start focusing on what actually is the fundamentals. More important now is we'll have to wait and watch how exactly is the policies the new president brings in the US, how they impacts our sectors basically. What we believe, with his pre-election speeches, that there might be some or the other tariffs which might be on its way, but we might be benefiting from the supply chain in our Asia area itself. So we believe that India actually is at is one of the largest beneficiary of this election. Of course, near term there could be volatility, but historically we have seen whenever there are elections in initial 1-2 months, there is volatility, but then it stabilizes, and we have seen good returns over next 6 to 9 months. So definitely focus moves to fundamentals now.
Absolutely. And talking about fundamentals, the Q2 earnings have disappointed. They've thrown a lot of curveballs. So how have you changed your positioning in sectors post what we've seen so far?
So let me put it this way. Q2 results were, of course, I accept they were below expectation. But what has actually happened is, wherever there has been underperformance or the results are below expectations, those stocks have been hammered badly. What we have seen is stocks wherein you don't have any negative surprises. Those stocks, there are hardly any stocks or limited number of stocks which have actually fallen, and those stocks continue to do well. So this clearly proves that the margin of error actually is very small, very less in the current market scenario. In our portfolio, how we are positioning ourselves because of this result season is not major changes from portfolio positioning perspective, because these are quarterly numbers. Festival season numbers will be coming in Q3, and we are also seeing heavy marriage season coming in the next couple of months. So definitely what we have seen is your rural continues to revive, but your many companies have given a commentary of urban slowdown. But yeah, so we are actually on a wait and watch mode, how things are panning out. And of course, in your Q2, you had heavy monsoon, so that could be one of the reasons why numbers are not panning out as expected. In Q1, we had election. So we need to see how exactly the domestic economy pans out now. So all eyes on Indian domestic economy now. How exactly are the numbers faring out at the economy level as well?
All right. Hi, Nikhil. Good afternoon and good to see you in. This is Nigel on this side. You know, a couple of sectors like defense, railways, they're both pulled back, but they've had a super duper run in the last 2.5 years or so. You have had some exposure, HAL, BEL, a couple of other defense names as well as part of the money that you manage. Is this providing a buying opportunity, or do you think you'll wait for a bigger dip to add on these positions that you already had earlier?
So, Nigel, hi, good afternoon. Let me put it this way. Some of these stocks have actually corrected to the extent of 30 to 40%. So this actually is a right time to start accumulating them. There are definitely opportunities in these sectors, but at one point the valuations were such that you were unable to justify those valuations, no matter what the order sizes were coming in. But now we are starting to see some or the other execution of those particular defense orders. And hence, we might start seeing them in the numbers as well for the company. So definitely, since those are still significantly lower from their 52 weeks high, I believe this is the right time to start accumulating them.
Okay, got that, Nikhil. Hi. So on IT, where do you stand right now? Because with this whole move in the US, it's all up for debate because A, the currency is depreciating, which is good. But then companies also have hedges in place. So it's not like it's straight away flowing through to the bottom line immediately. And then, of course, this whole second guessing how protectionist will new US policies be and what happens to visas and stuff. So what's your sense right now? What's your stance on the sector? And would you change it at all, increase or decrease allocation going with this Trump win?
So as of now, let me put this way, we are equal weight on the IT sector. Definitely there are both positives as well as negatives. Your currency will depreciate, but you have hedges in place, so it won't flow to your bottom line. And on the other hand, because of these visa issues, there might be some impact on these companies. But you see from the other perspective that once the US economy start growing domestically, then there is significant amount of demand which might crop up for these companies from US. So that is where things will start moving on, but definitely that is a couple of quarters away from here. So what we'll see is at least for next 1 to 2 quarters, things will remain as it is. We are more or less at equal weight positioning in IT, and the 3Q quarter commentary which comes out in Jan month, that would be very important for the sector as a whole. So we are at equal weight and on a wait and watch mode now, how things pan out.
Nikhil, some of the quality banks like HDFC Bank, ICICI Bank reported good numbers this quarter. Did you add to any of your positions? Would you recommend buying at these levels?
Yes, so we are now bullish on the larger banks, be it private or public. And we are overweight position on the banking sector. On the NBFC side, we are bullish on non-personal lending NBFCs. Specifically, I mean, basically those more of pick and choose on the NBFC side, but on the banking side, we are definitely bullish. Earlier, we were of the apprehension that once the rate cut starts in India, these banks might start seeing pressure on their margin. But what we have seen is the governor stating that the change in stance doesn't mean rate cut is on the cards. So, and what we see on the inflation numbers in India is that rate cut might not be around the corner. And also the recent numbers on the deposit and credit side, we have seen the deposit growth rate have already overtaken credit side. So definitely now banks are in a better position to manage their margins as well. So that was our worry. And these are all the green shoots which are visible, and hence we are positive on these larger banks.
Okay. All right, Nikhil, we'll leave it on that note for this afternoon. Thank you very much for joining in. Well, that's a view from LIC Mutual Fund. But let's now head.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.